Tech has been hit 3 different times in the area of 9% to 10% this year. It's rebounded every time. We are in essentially what appears to be a virtuous upgrade cycle, both for businesses and consumers. Intermittently, you get some bad news. People think tech has had it, but the multiples have really dropped after last week. Likely people will come back in, and the story remains solid to us.
It's funny, Ilarian's on Squawk this morning as well, and he says it's hard to get a recession when you have rising household income, government spending, business investment, unless there's a major policy mistake. So is that possible?
Right. Yeah. I mean, I think that's pretty similar to our view as well. I mean, we don't think we're not at the end of the expansion, but I think we're nearing the end of the expansion. If you look into 2019, you're going to see fiscal stimulus start fading. You're going to see obviously accommodative monetary policy start receding, and then of course what we've talked about many times before is trade policy risk, and that trade policy will not be a headwind to growth until really 2019. So yes, so that is exogenous shocks. Trade policy could absolutely hit in 2019.
John, after a 9-year run, is it that controversial to say the best is behind us? I mean, I guess he did say the 3 to 5% next year part, which I guess is probably the point that most people would take issue with. But what's so controversial about expecting that it's not going to be as good going forward as it was looking back?
I think it's a lot easier to think that after such a long run, you're liable to get a slowing, but you need something material to change things. The biggest threat, of course, is the trade war business. If we go into a protracted trade war, that could trigger a recession. But the Fed has been remarkable about not making a mistake now for almost 10 years. We think it's because the Fed is more adept at gathering data. The sources from which it gathers data are more accurate because data today is more in real time than ever before. And as a result of that, the real risk, we think, is related to trade, but we think China is bound to come to its senses related to the need to upgrade its trade negotiation procedures when it realizes it indeed is a developed market that still has problems that are from emerging markets, whether it is human rights indiscretions, whether it is issues of transparency, governance, and accountability. In terms of wealth, China is a major player, and it needs to come to the fore and treat its trading partners on that type of level, we would say.
And of course, we could talk about China. We've been talking about China, but maybe we need to be talking a little bit more about Saudi Arabia and sort of the rising tensions between the U.S. and that ally right now as well. How much of a risk is that if you see it continue to ratchet up?
Well, look, I think that different administrations have had different approaches to Saudi Arabia, but they have been, I think, sort of viewed as a necessary partner regardless of administration stances. I don't see, based on President Trump's comments yesterday in his 60-minute interview, that changing necessarily all that much, but there's certainly going to be tensions. Going back, though, to your point about China, I mean, China really is going to be the big source of risk here. I think we're probably a little bit more skeptical that China comes to the table, just given the real inherent structural concessions that the administration is asking for from China. So we think that this, trade policy risk is likely to be a risk into 2019 and obviously could be a headwind.
Is it clear